Global economic growth will be disappointing in the new year. That is the very latest from the head of the IMF, Christine Lagarde. Rising interest rates in the U.S. and economic slowdown in China, the reasons she cited for putting global growth at risk. The Heritage Foundation's Steve Moore is with me now. So, Steve, first and foremost, do you agree with Lagarde?
Well, if 2016 is going to be disappointing, that's pretty disappointing in itself, because 2015 wasn't a very good year for global growth, Deirdre. And look, I don't put too much stock in what the IMF says. They've been wrong about global growth now for the last 4 or 5 years. I reject the idea that the U.S. raising interest rates is bad for the world economy. I actually think it's sort of a sign of some strength in the U.S. economy. We're still the hub of the economy. But I agree with her on China. I think China is very problematic now. They're still a command and control economy, and they just haven't figured out how to get back to the 8, 9, 10% growth that we've seen for 20 years there.
Okay, and to your point, I mean, is there really a country where the economy is knocking it out of the park? Because we did, and kind of going back a few decades, we all sort of took turns, right? At one point it was Japan, then it was the U.S., then, as you just mentioned, it was China. So if China is not literally firing on all cylinders, the U.S. is at around 2%, what happens?
Yeah, well, I was afraid you were going to ask me where the growth is going to come from, because I'm not quite sure. I mean, I think the U.S. in 2016 is going to be stuck, Deirdre, in the same rut we've been in now for 5 years. 2% growth. It's not terrible, but it's not nearly where we should be. It's kind of treading water. I guess I would say that, you know, look, China I'm not high on right now. And I'm not high on Europe, by the way. I just think Europe is still stuck with these kind of big welfare states, the high tax rates, the green energy subsidies that haven't worked out. I would say, you know, some of the other Asian countries like, you know, Vietnam and Singapore and maybe India and countries like that are where we could see the growth rates surprising on the upside.
Okay, surprising on the upside. Everybody who was looking at the energy market is worried about more surprises on the downside. Just even looking at oil again today, another close under $37 a barrel. So at first movement, this is great. I'm talking only about the U.S. for U.S. consumers. They don't have to pay as much when they fill up at the gas tank. They can spend more on other things. But at a certain point, that begins to turn against us. What number, Steve, is going to raise a red flag to you?
You know, I guess I just have a different opinion than most of the economists who look at this. This is a U.S. tax cut of major proportions for industry and for business and for consumers. I'm estimating that the average American family saved about $500 to $1,000 thanks to lower gasoline and natural gas prices. That's a big saving. That's a big stimulus to the economy. But it's also a world tax cut. Look, most of the countries in the world, Deirdre, are consumers of energy. They're not producers of energy. And the U.S., by the way, on net is still an importer of oil and gas rather than an exporter of it. So I don't buy this argument that low gas prices are a bad thing for the American economy. And, you know, I don't see too many people frowning at the gas pump when they're paying $1.89 a gallon. Yeah, it's hurting the oil and gas states like Texas and Oklahoma and North Dakota, but I think for manufacturers, for consumers, it's a good news story. But by the way, I don't believe this idea that somehow we're going to see oil prices go down to $25 a barrel. I see it stabilizing in the $40 to $60 range.
Okay, so you say we stay, even if we're at the lower end of that right now, you say we stay here and we're not going to get to this point where energy companies cut more jobs, and then that creates a kind of domino effect which hurts us.
I don't think so.
It's a good silver lining to have from you, Steve Moore. I want to ask about the flip side, what I alluded to, obviously deflationary, but there's a lot of analysts there saying essentially inflation is going to be one of the biggest stories, thanks in part to the Fed. What is your take?
You know, look, these are contradictory things. We just talked about how, you know, energy prices are falling. Energy is the #1 input in everything that we produce, right, virtually. I mean, it's an input in every single thing, whether it's the TV camera that I'm looking at right now or whatever it is, everything is involved in energy. So if energy prices are falling, Deirdre, somebody's going to have to explain to me why we would have inflation. This is a disinflationary effect that has reverberations throughout the economy, and the Fed then is right now, for the first time in 7 years, pulling back on money. No, I don't see inflation. You know, I don't see inflation raging out of control at all.
All right, Steve, what is the one thing you're watching in the new year, big picture, economic standpoint?
If there's going to be any progress in the U.S. on the things like a corporate tax cut, if we could get that done in 2016, Deirdre, that would unleash the economy. I really believe that. I think you'd see jobs coming back to the United States. I think you'd see a lot more investment in this country. But everybody is going to be so focused on this election throughout the year. I think the economy is going to be in a bit of holding pattern until we know who wins.
All right. Fair enough, Steve Moore. Always great to chat with you.
Okay.
Thank you for the time.